Very good afternoon, everyone. Welcome to yet another uLaw webinar. In today's topic, we're going to be covering about the disbursements or the client expenses that are incurred in a legal office and how to manage them and how not to manage them, the do's and don'ts of managing those disbursements or client expenses under our topic of Disbursements Demystified. This webinar has been approved for 1 hour of CPD credits by the Law Society of Upper Canada. So we encourage you to log into your portal, Law Society portal, and search for the Disbursements Demystified subject, and then apply it towards your the required CPD credits for the year. I also kindly request that you use the chat window to ask any questions that you may have. I am joined by my support staff who would be more than happy to answer it as we go along, or if you want to hold on to your questions till the end of the session, that's perfectly fine too. And we encourage you to ask us the questions because that becomes a big part of the learning process, which is one of the key factors or KPIs of these webinars as well as the CPD. And we look forward to your questions to you, again, using the chat window at any time during this session. Like every other uLaw webinar, today's webinar has a set agenda, especially because it's CPD accredited. This is exactly the agenda that was proposed and that was approved for. And the agenda items include what are disbursements to begin with and how do we manage them. And when I say we, I'm talking about legal professionals, how best to manage them. If you are a legal professional and do have a trust account and in the habit of managing retainers, why not manage disbursements right out of the trust account? What are some of the benefits of doing that? If that's not the case and if general is all that you manage, then how do we manage disbursements that are paid out of your general account? What are the criteria that you need to know as you pay out disbursements on behalf of your clients as an expense towards that file, and the different options that you have when managing and maintaining them, including the different types of general disbursements that are available to you, right? As pragmatic as it seems, you're obviously going to have billable or expenses that you raise on actuals. So a court fee or an application fee that the jurisdiction has mandated, well, that's a fee that you're just going to charge on actuals. Then there are the unit rate expenses, whether it's faxes, postage, anything where you're paying by unit rate, where maybe a fax is 75 cents a fax. You've just faxed out 20 of them, and you're going to charge them $15 for it, right? Or if it's a postage and you're charging them $1.25 per postage, and you've just had 20 of them, and then that's $25. That's what you're going to charge. So that's all unit rate. You can decide based on the situation whether it's tax exempt or not, both for the court fee, application fee, or any other expenses. Mileage, it's a very interesting expense or a disbursement, whether you're working for an individual client or we have friends, some legal professionals who actually work as a stand-in or stand-by for other legal professionals, and if there's travel involved, how do you go about charging the mileage? So one of the first items that you want to keep in mind is as you get into this profession, and if you've been in this long term, then you know this, is divvying up all of these different costs or disbursement costs that you have as part of running your business, right? Having preset costs that are for mileage, maybe it's 50 or 55 cents a kilometer, and decide what those rates should be for postage, for fax, for photocopies, so on and so forth, okay? If you want to charge for travel time in addition to the mileage, you're obviously able to do that. So you basically charge for the time. And then there's the recovery of expenses, right? And then the outsourced work. So we're going to talk about how certain expenses or certain types of general disbursements where you have the opportunity to mark up those expenses. So what you charge your client is slightly marked up or marked down. So in terms of a good example would be an outsourced work. If for some reason you are not able to get to court, which you had promised to be there to your client because you didn't want to incur additional charges of using a stand-in, but unfortunately you couldn't do it, you had a stand-in, but because of the word you'd given your client, let's say your stand-in paralegal charges you $150, but you're only going to charge your client $100 for it. That's a marked down expense, or you're eating that $50 as a loss to your business. Likewise, you could have a markup if you've purchased a certain type of software in bulk, be it DivorceMate or anything like that, but then you're spreading that cost across multiple clients. Let's say you actually negotiated $600 for 6 licenses. Then you are basically have the opportunity to mark it up for each of those 6 clients to charge them, let's say, $110, so kind of almost making $10 a pop type of thing. Okay, so just kind of giving a general lay of the land, painting the picture of the different types of general disbursements that you should keep in mind. And last but not the least, we're going to look at all this is great, but what are the expectations of the law society when it comes to reporting these? The one is to, as we always say, is to find a way that you can capture all of this as and when it happens, and then be able to report on it, but report on it in a very compliant and law society friendly way. Okay? So this is really the agenda for today, and want to spend maybe half of this presentation walking through my slides, setting the context, and then using uLawPractice, which is a legal accounting and practice management software, as an example to walk you through a simple file or matter and how you would go about dispersing and using different types of disbursements. Okay? So again, this being a CPD is really not meant to showcase uLaw as a product. uLaw is just being used as an example to illustrate the concepts that we're going to be discussing today. Okay, so kind of starting with the bare bones, what is a disbursement and what does that mean to your business? Okay. The definition that we found on Wiki is a disbursement is the act of paying out or dispersing money, where the name comes from, such as money paid out to run a business, expenditures, or the amounts that a lawyer may have to pay out on the person's behalf in connection with a transaction or a file or a matter. Okay? A layman's term would be the expenses that you've incurred for a specific client by your legal office. And we wanted to turn it around from an accounting perspective, and what does that look like? And what an accounting perspective is that you have the obligation to record those expenses in the books to balance the accounts when you spend, invoice, and recover that expense. So you're spending that disbursement or that expense in advance, and then you're raising an invoice, and this is specifically to general disbursements. You're specifically raising an invoice that highlights that expense that you just incurred, that you already paid for, and then you're looking to recover that expense by means of your client paying that invoice. Bottom line, you need to manage and maintain the proper books that can reflect those numbers. Again, disbursements, the fact that it's both trust and general, it's very important that you keep tab and maintain those books, and we're going to go through what those documents are. The next question, now that we kind of have set the context for what a disbursement is, the next really quite big question is, how do we manage these disbursements, and what does it really take to manage these disbursements? One of the fundamental steps that we continue to, through our webinars and through conversations that we have with clients that we stress upon, is the habit or the discipline to have within a legal firm to record every transaction as and when it happens, with the disbursements being one of the most critical components, where it's very important that you record the disbursement hopefully as soon as you've done it, so that it's still fresh in your mind and you're not scrambling back, you've lost your receipt. Very practical reasons that the more you delay, the more you procrastinate, the furthermore it's in your head as a bit of a burden, right? So the sooner you can get it off, record it, take down, if you have to do it within your Evernote real quick, take a picture of it and then come back to it later, that's great. Or if you're in the habit of being able to quickly open your legal accounting software or an Excel sheet, or any other way, manual way of recording it as and where it happens, including the components of those disbursements. So it's not just I paid for this, it's really talking about the different components of it. So what was that disbursement to begin with? When was this disbursed? When did that happen? When did you disburse that? For which client or matter was that particular disbursement for? What was the type of disbursement? And how was it paid? Okay? And obviously a reason for that expense, whether it's mileage or travel time or application fee, obviously would go a long way. And this would go a long way when you have to reconcile your books, Trust, General, equally. The next important step, or a key step that you want to keep in mind, both for Trust or General, is recording the client's name. And I think we mentioned the client's name, the matter, and that disbursement was related to. Okay? And let's say this was paid out of General, which 8 times out of 10 happens, whether it's for you to collect your air miles or airplane points, or just because you don't have a trust account. If you're using General to pay off disbursements, then these are some additional things to keep in mind. Decide the portion to invoice and when to send that invoice to the client. So let's say you could decide whether it's a combination of disbursements and legal fees, the billable time flat rate, whether you wait for the entire matter to be done, or you get in a habit of having an iterative process of sending interim bills, deciding when and how those disbursements play a part and become a part of that invoice. Okay? So keeping in mind that disbursements do become a part of that invoice. So it's always a good habit to pre-bill. So let's say a great example would be if for some reason you've forgotten the travel mileage to add in as part of that invoice cycle, doing a pre-bill or a preview of an invoice would give you the flexibility to always go back, add that travel mileage, and then invoice the client. So it gives you a fallback mechanism, if you will, when you do a preview. Recover or get paid for that expense. So obviously you raise the invoice and then you follow up to get that invoice paid, so that then you can move that money or recover the expense that's already been paid for, whether it's through your credit card or through your general account. And finally, yes, we've got to, it's kind of summarizing all of that, record that invoice and the expense recovery. Okay? All right, so how do I spend it and what should you record? So this is kind of our next segue into the different characteristics of disbursements and how you can manage them. Why not pay it straight from trust? So let's say you already are committed to having a trust account or retainers. How do I keep it simple? The opportunity that you have if you have a trust account is the ability for you to disperse right out of your trust account. Okay? There's no need for an interim step of raising that invoice and all of that. You've already got the advance or the retainer in your bank, and let's say you get in the habit of saying some of these, especially the actuals. So we talk about court fee or other kinds of fees, where it's a billable or an actual expense, where you really aren't looking to make money out of that expense. It's not an outsourced work. It's not where you can mark it up. You can't say the court fee is $385, right? You can mark up certain expenses to begin with. So for those, why not just keep it simple, where you can just take the money right off your trust and it's just lesser paperwork, bottom line. Obviously, that's when you pay it out of your trust account. As I mentioned, you don't have to recover that expense, meaning you don't have to raise the invoice to recover that expense. And as I mentioned, it's not, if for some of those types of expenses, when it's really not your money to begin with, why not use the trust account right away? The bottom line is trying to reduce the amount of bookkeeping that's required in managing, maintaining, and recording these different transactions when it comes to disbursements. Now, the second option is paying it from your general account, either through your general bank account, business credit card, or in some cases, just paying out of your own pocket, right? So you're at Staples, you've forgotten your wallet, and you just got to buy, you got to fax that matter-based information, right? And you just used your cash to pay $20, then that's the owner's pocket account we're talking about. Regardless of these three different types of general accounts that you pay out of, it's very important that you record the expense information with the date, the amount with the appropriate taxes, and that's very, very important with the taxes, the method of payment so that you can always reconcile and figure out where the money came out to begin with. Obviously, record the matter and client and how it's paid for. Okay? So this is, again, just expanding on everything that we've spoken before and how you manage your expenses coming out of general. Moving along, when and how do you recover these disbursements, and how should you do it? Okay? So even before you raise that invoice, here are some of the steps that may be handy for you to keep in mind. Recording, finding a way, or finding a habit, or a system, or a discipline. It's always the overused word. Finding a way to record those expense informations with the date and all the particulars that we spoke about as and when it happens. Okay? Especially when it comes to taxes being involved, recording the amount with the appropriate taxes. Okay? We can repeat that as many times as we want because this is very critical. And really have a game plan, whether you really need a markup or a markdown in dealing with that general disbursement. Do you need it at all? If you see the opportunity to do it and you think it's prudent, then have a plan of action of how you want to go about doing it. Once you have all this information recorded, you're now ready, obviously, to raise an invoice. So you can include all of this information along with the amount, the taxes, and raise that invoice. Okay, double check your preview, or if you're doing this manually, make sure 1 time, 2 times you review it before you send it out to your client. Now, if trust money was involved, and for some reason you chose not to use trust for your disbursement still, when you do raise that invoice, that money is now recoverable, and you can move that money from trust to general. So let's say you received a $500 trust retainer, but instead of using trust account for your disbursement, you'd again decided for Aeroplan points to use your business credit card, and you dispersed the client out of general for, let's say, $300. An application fee and a couple of mileages, faxes. Now, once you've raised that invoice, the fact that you have money in your trust entitles you now to move that money from trust to general. So that's one pathway of recovering that expense, of moving money from eligible trust money from trust to general. Okay. The other obvious reason is if there was no trust involved to begin with, then obviously you're going to pay yourself. Once the client pays you the money, then that money is going into your general account. But regardless of the pathway that you take to recover these expenses, it's equally important to keep in mind that the ledgers and journals that we're going to be talking about a bit later, the different ledgers and journals that the Law Society requires you to submit, are properly managed and maintained. The reason that the Law Society is asking you to generate these ledgers and journals is to make sure, is to highlight if there are certain characteristics of how you do it, and be able to obviously manage the proper bookkeeping that's required to manage your trust funds or other funds. Okay? We're going to be using this slide a little bit more towards the demonstration aspect of it. I think we've already touched upon the different types, but the fact that this is going to be available to you as a recorded version, I think it really benefits for you to fast forward to this slide, pause it, and really review it, if you will, and digest the different types of disbursements. So we've kind of broken it down in terms of discipline, which one would be a candidate for both coming out of trust and general, and which one is really not a candidate for trust to begin with. Okay? So a good example would be billable. So we spoke about actuals, a court fee or an application fee could potentially come out of both trust and general. Unit rate, only general, because you could be charging up on what those fax or photocopies costs are. Mileage, again, general. Travel time. Any recovery of expenses and actuals. So we just spoke about that example where it's a $500 retainer and you've done $300 worth of expenses. Those are all actuals, application fee. You can do it both out of trust and general. You basically can disperse direct out of trust and general. But if it's going to be with the profit margin, whether it's marked up, marked down, then it's got to be only general. So that's truly the differentiator. If it's on actuals, be aware of the fact that it can be done both out of trust and general. But if it's got to have a profit margin or positive or negative margin, then it's got to be done out of general. Okay? So our first snapshot of looking at, and again, this is right off the bookkeeping guidelines of the Law Society, what are these ledgers and that need to be managed, both from a trust as well as a general perspective? Again, the most popular question is, I'm not doing trust. If you're not doing trust, great. You don't have to have the trust journal and ledgers. You just have to deal with general. Okay? So typically during an audit, depending on what type of audit it is, the disbursement ledgers for both trust and general are reviewed. So this is a common feedback that we receive from our clients and from the legal industry that we work with. Every transaction that's been disbursed needs to be recorded in your disbursement ledgers. And obviously, depending on the nature of that disbursement, it's maintained either on a trust or a general ledger. Okay? If it was dispersed out of your trust, it's got to be in your trust ledger. If it's out of your general, it's no rocket science. The fourth bulletin is obviously a very critical and important point. Each ledger, regardless of whether it's a trust or general, needs a running balance by date, basically telling you every transaction as it happened and if there is a balance on a particular date that you're generating that report. And then we look at some examples of the trust ledger as well as the general ledger. And what really stands out are the particulars of these ledgers. So let's look at a client's trust ledger, which is at your bottom left corner of your screen. You don't have to focus really on the numbers or the particulars, but focus primarily on the bolded columns. So those are the real pieces of information that's being captured within that ledger. So really the date, so when it happened. So they call it particulars, so this could be just a description of what was it for. The receipt, so basically you received that payment and you did the disbursement. So basically after the fact you moved the money and having a running balance. So from August 30th when you received, in the particular example of Kirby, you have August 30th where you received that mortgage advance, and on 31st you did trust transfer. The balance, the running balance of 0 is critical for you to keep in mind. Okay. Now let's move over to the right-hand side. If you look at a general ledger, you can see that there's some additional information that's being captured. So you've got the date, very similar to a trust ledger. You've got the reasons for it. Okay, the reasons are, a good example would be an invoice number. because that's really the reason why you're getting that expense. The fees, the HST, and the balance owed. Okay, so HST is a critical component and a differentiator between these two ledgers. And we're going to walk through an example by using uLaw just as a placeholder product that can facilitate the learning experience. So let's break it down one at a time. So we'll first look at the disbursement journals. So we looked at ledgers, and we've kind of broken it down now in terms of journals. Now the big difference between the ledger and the journal, because journals are also looked at during audits, but one important difference I would say is you're also capturing the type of activities as well as the method of payment, which was not otherwise captured in your ledger. So it was not captured how it was paid for. It was just the date, what was it for, and what the amounts were. And in the general ledger, it was a HST component, whereas in a journal, one of the most distinct differences is that you capture the type of activity as well as, importantly, the method of payment. So was it through your credit card? Was it through your owner's pocket? Was it through, your general account? And we look at some examples for Leslie the lawyer for a general receipt journal. You see it's the date, source of funds, or where was it received from, the amount, and the method. And then if you look at a general disbursement journal, you're also looking at the method, who was it paid to, the particulars, the amount, and the total paid. Okay, and then we're looking at fee book. Obviously, the fee book records all the fees, including the disbursements raised in an invoice that needs to be recovered from the client. So this is an important document as well to be kept in mind as you generate them, regardless of how you do it. The fee book, importantly, obviously records the invoice number. So if those expenses and recovering of that expenses was part of that invoice, then you can be rest assured that that's available in your fee book. It's important to break it down by client, which client, and if a particular client has multiple matters, then you would see them repeat within this particular document. Okay. And the appropriate taxes that were collected as part of those disbursements. So if you really look at that example real quick, it's got the date, very important, the invoice number, the specific client for which the fees were billed, an invoice number, so you can always relate to it, the amount, and the HST, if HST is a component. And before I take the next 25-30 minutes to jump into the software to demonstrate and kind of walk you through how this is day-to-day process managed and maintained, as an example, we want to look at and kind of emphasize on why you should think out loud about using an accounting software or a software to begin with, or a system to begin with. So our goal is to provide enough time back in your life so that you can maximize the time and effort spent in these bookkeeping efforts. So you obviously can manage this manually, but imagine if you are, and depending on the type of business and the area of practices that you focus on, these are repetitive manual tasks that you have to do on a daily basis, on a repetitive basis that leads to human error, which then you need to go back and track. So there are certain things that you can leave to software to manage. There are certain things you can't. These are certain things that you should feel confident in today's context with the advent of technology, with a lot of investment being made in the legal tech space. Quite reassuring to know that software is here to help you as legal professionals, and this is one such area that you can take advantage of. Okay. So what are some of the distinct advantages that, again, you may already know many of these. The fact that you do have to record these events as and when it happens having a system in place or software or some means that it's automated allows you to set reminders, allows you the capability to record it in real time. The ability then to even go back in time. Some of the legal accounting software allows you to directly import all that bank records, whether it's a credit card or a general account, allows you to import all that information for your reconciliation. Again, the goal being keeping the bookkeeping information as close to real life or the bank information, because that makes the whole reconciliation process that much more simple. The bottom line is let the software deal with managing all these books for you, where you're just doing what you do best, being at court and being a legal professional, keeping in mind the four core components of why software to begin with. Reducing human errors, right? So the chances of compliance and the chances of error being lower, with the compliance being higher. Accountability, again, going back to, do you want to take the accountability of doing this manually versus being able to use a software that's convenient? Gives you the opportunity to give you deep dive analytics, because as you do this, you need that kind of information at some stage in your career or of you running your own business to focus on the next step. How do I grow within my practice? Analytics at that point becomes very critical, but by design, softwares allow you to capture all this data. So at the end of 2 or 3 years, you have enough historical information in the software that can give you patterns of where to focus to make that next big jump. Okay. And the bottom line, which is the ease of use. If you are managing your own documents and Excel sheets, etc., then at some time it's going to get pretty painful unless you have, again, a system and a process in place. Again, this is no way and means of selling software. This is just highlighting and letting you know the options that you have. You probably wouldn't have had these options 60 years back when people were doing this on paper. Now, with a lot of focus on legal tech, you do have the advantage and the opportunity to use software to help you through this process, because the Law Society's guidelines haven't changed. I mean, they have been reviewed, revised, but the need for those documents haven't changed, right? Okay, so what are the benefits of managing disbursements? I think we've spoken about this in our earlier slides as well. Disbursements obviously can add to your profit margin if managed properly. I think that was a big takeaway. If you didn't know that, then that's obviously a big takeaway from that I would love for you to take from this webinar, is in a very prudent way, you do have the opportunity to mark up some of these expenses. So a good example is me speaking to one of our legal professional clients. You know, obviously legal professionals go through a lot of hassle before they can negotiate a really good deal with, let's say, a software vendor. And it was their effort that they were able to negotiate that deal to begin with. So having that profit margin is really based on the effort that they've put in to begin with. So you don't have to feel, it's not something that's frowned upon as long as it's done in a very prudent, honest way. Again, software is a great example. You can have other examples such as outsourced work, stand-ins, etc. And before now I jump in, again, really at this time, I'm going to move away from the slides to actually walking you through a use case of how we would, in real life, do all of that and the types of documents that you can generate, okay, using a software, for example. And uLaw is only an example here. This is in no way to showcase the product to you. It's just to showcase the concepts of disbursements to you. And if you don't know who we are a very proud Canadian legal accounting and practice management software company. And we do offer no obligation 30-day trial, and we'll love for you to give us a chance. Okay, now switching gears, I'm going to be using one of my playground accounts that I always constantly use for demonstration purposes. And we're going to quickly dive into, so let me go back to that particular slide that we spoke about. that we would probably use. Okay, so this is a slide which really highlights the different types of disbursements, and let's particularly look about it. So one of the first things that I'm going to do is obviously create a client, because as I mentioned, these are expenses on behalf of a client. So let's quickly go in and create a client. I'm going to create a client. Let's just come up with a fake name. Always the hardest part. Okay, so let me just put in a quick address. As it is a Law Society compliance. I'll say this is on King Street. Let's go ahead and click the Save button. Okay. And now we're having created that client. Let's go ahead and create a file or a matter for that particular client. Let's assuming that you've done your conflict screening and you're totally comfortable. We're not going to look into any of those. We're going to focus on the client expenses. How do we do it through a trust, through general, and all the ledgers and journals that you can generate, that you should be generating. So for Benjamin Franklin, let's click on the Matter button and dive right into Matter screen. And I'm going to take a very simple example of small claims. Again, purely based on the area of practice, the use case of the different types of disbursements may change, the fees may change, but the concept remains to be the same, right? Or maybe for the purposes of this demo, I just got this as a feedback from my support staff, and this was highlighted in our previous demonstration. Let's just consider a simple family law matter, because I am then able to showcase to you some of those general disbursements where there's a markup. Okay, let's go ahead and say it's Benjamin Doors. Okay, just a little pivot right there. Perfect. So now you have a file created for Benjamin Franklin, and you know it's a family law matter. It's a divorce case. Now you're obviously going to, so none of these examples are going to be real life examples. So this is, again, just to run through concepts. I don't want you to take some real numbers out of this demonstration. Let's first assume there's a retainer involved. So we'll start off with intaking a retainer. We'll go ahead and click on New Retainer, and I can change the date, but I'm just going to stick to today's date. I'm going to say I'm going to take 565 as the retainer. Okay. And here comes all the particulars that we discussed about. So really the date, the amount, the, how did the person pay you, right? So what was it through a bank? Was it through these different formats of check, money order, bank draft, email transfer? Or if this was simply, so I think that there's a quick question about how do you provide a discount. I'll show you that as well. It's slightly different. It really depends on whether it's it's a discount on the expense, a discount, a write-off, or is it a discount on the legal fee itself? So we'll kind of walk through that real quick. So let's say this is a check. For purpose of this demo, I'm just going to keep it fairly simple. So it's a check number that the client's given us, 565. We're putting it right into our trust account, and I'm going to give the client, as a habit, a receipt. It's a great habit to always give clients a receipt for every payment, whether it's trust or general, right? So now we've got that 565 in it, right? So as a first example, let me go ahead and put in a retainer. So to do that, I'm just going to go, a disbursement. I'm going to the Disbursements tab, and I'm going to pay the first disbursement right out of trust. So there's 565. I'm paying right out of trust, okay? And basically it's going to ask, again, if you look at that trust ledger we looked at, the particulars in that, the date, very important, the amount. Okay, so let's say this is for $65, and how did you pay that $65 to begin with? So let's say it's a trust check. What was the check number, right? And what was the description? So this is an additional particular so that it's easier for you to relate to what that expense was. So you could say this was maybe the court fee. Okay, you can obviously add to it. You could basically add the file number, though it's going to be directly related to it. If you wanted to, you could do that. I'm just going to leave it at court fee, and you could say paid to Ministry of Finance or Attorney General, I think. Okay. And it's coming out of your trust account. If it's a check, let's go ahead and print that check too. Might as well, right? So you don't have to handwrite it. It's a $65 trust check that's coming out of your trust account directly. There's no need for you now to raise an invoice to recover that because that's money just going right out of that advance retainer. Okay? So you're just using the money that the client gave you to pay off for expenses that are related to the client to begin with. So let's go print that check. And there you go. You can see right away that the trust receipt has dropped down to $500. It was originally $565, and the trust, what's available as a receipt so far is now $500. And it says refund payout because if the client were to not engage you at this time, then that's the amount of money that you would have to refund. Okay, so let's say I'm just to answer that discount question, I'm going to say initial client intake. Let's say I charge $120. Okay. We have the opportunity to add a discount. So let's say that you don't want to charge them the $120. You basically just want to you want to provide a discount of $20. You can add that. And again, if this is related to a disbursement, you can check that off as well. So we kind of give you the flexibility, if you will. It really comes down to what the situation is. So it's basically using the feature of the add discount. It's basically how you would include that discount and then you would raise the invoice. Okay? So when you raise that invoice, you'd see that. Okay? Let me focus going back to the example. I'm just going to edit that item and I'm going to say just unlock it. Okay. All right. So I'm just going to bring it back to that. So let me go ahead and so that was the first example of providing a disbursement right out of the trust. So here's my example. So let's move on to. So that was a billable. So it was a court fee. So that was a billable example. So let's now look at some other examples in terms of the general account. And I have another 10 minutes of your time. So let me try and run through this. Same thing. We'll go to disbursement, add new disbursement, and let's do one out of general. And this time, maybe I'll focus on a unit rate. As you can see, the different types got billable mileage unit rate, canceled travel time. Even if it's an assistant who's traveled on your behalf, you can maybe charge them. So let's just say it's a fax. Changes to unit rate, so it's going to be 10 faxes at about $1. Maybe just say 100 for the purpose of this demo. You could report that expense as an office expense, but then again, let's not focus on that right now. I'm just going to go ahead and disburse this client $100. Okay, so you're going to notice now, obviously, the projected balance comes down by 100 and change with taxes. So it's 100 plus the taxes. Let's move on to our next example. So we've looked at obviously as a unit rate. Let's look at mileage as an example. So let's go ahead and do the same thing. I'll say our legal travel mileage or lawyer travel mileage. Basically asking you, all right, how many kilometers did you travel? Both ways or one way, whatever it was. The amount of you want to charge. So it's 65 cents a kilometer. Perfect. That's going to be $65. Tax exempt. You're going to add the tax. Perfect. Obviously, the options are yours. You are the person who's going to tell the software what to report. Even better if you can tell the software what actually happened to be reported. Okay? So that was kind of the next example. We looked at trust billable, which is a court fee. We looked at a unit rate for fax. We looked at mileage. Likewise, you could do travel time. But I'm going to focus on a recovery expense with a profit margin, just to kind of highlight what that looks like. So to do that, I'm going to say a miscellaneous expense. So I'm going to go ahead and say item name software costs, and I'm going to charge the client $100. Okay. Well, let me charge the client $120. Whereas let's say you paid for this particular software only $100. Okay, so that's a $20 markup that you're charging your client versus what you actually paid for it. Or a meals would be a great example. Okay, where you're going to charge a little bit more than what you actually paid for, including disallowed expense. Maybe there's a tip that you added. You can kind of incorporate all those as well. But let's keep it simple. This is a marked up software cost that you're just have a profit margin of 20% right here, and you're going to say paid to, could be anybody, but how did you pay for it? So if it's going to be a credit card, let's do that. The credit card company would obviously give you transaction number. So here's another disbursement that's just gone in. Okay. As you continue to disperse your client, keep in mind that you still haven't made your money. This is still not your money because you still haven't raised that invoice. That's what's being highlighted. There's an invoice pending. You obviously need to raise that invoice so that you could make that money yours, recover that expense to be technically correct. And last, let me do a consultancy expense, which is also a general expense, but let's say this was outsourced work that you'd given to someone else. So this was court appearance. Let's say you had someone else do it. You're going to charge your client, let's say, $30. Let's say $40. And let's say the cost incurred, or whoever the third-party consultant was, he actually charged you $100. But this really is a $65 loss that you're taking in. So there was one example where there was a profit margin. Here it's basically you're taking a cut. Let's say again, so you paid off your credit card, transaction number. Okay. So in doing that, what you accomplished are kind of looking at different types of disbursement types that we were highlighted in this particular slide, types of disbursements, and how you've kind of gone about reporting it. Right now, that's all we've done. We've kind of reported as and when it happened, exactly how it happened. Now, the last step in the puzzle is to actually go ahead and raise that invoice. We spoke about pre-bills, obviously a great habit if you can do a quick preview so that you're very, very sure of all the information that you've captured in this invoice before you send it out to your client. So that was a little bit of a billable time. Here are all your disbursements. A pre-bill obviously has a preview, so you don't accidentally send it. Let's say everything looks good. You're going to go ahead and raise that invoice. That's when you really make your money. We'll even mark it as paid because this is an example where you already had trust money and you're just drawing off of it. You know, one of those first examples we spoke about. If there was no trust money involved, obviously there would be no retainer. And after you raise this invoice, you're not moving money from trust to general, as in this case. With no trust involved, you're just accepting a client payment. Okay? So here's our first invoice. This is very important. the invoice that highlights those disbursements as part of it, right? I want to spend at least 5 minutes in showing you the journals. So let's have a quick look at all the disbursements, making sure they look nice. The faxes, in total disbursements was $361.60. It's obviously a running bill, so has, importantly enough, it has the $65 of the court fee. That was a disbursement right out of trust. That's reported in this invoice. Your client knows how his money was being used. And that's the retainer balance in trust. You sign it, you send it to your client. And now in this particular example, the fact that there was trust money involved, now you got to move that money. It's one more step to make that money yours, which is moving it from trust to general. So let's, in uLaw at least, you hit the question mark, you can do the trust transfer here, or you can just do the trust invoice payment transfer. Same screen. So moving it from your trust to your general account, and I'm just going to assume you wrote yourself a check. Okay? There's about $2.80 left, so you can, just like your discount, you can just go back and you can refund that retainer. And it's $2.80, give them a cash. Okay, and you just give them that cash. That's it. Okay. After you've done that, so you're basically just going to go and close that account off because you've pretty much done with the whole matter itself. Now it comes down to those journals and wonderful documents that you need to maintain that reflect all of this that happened. Okay, so the first step in this particular context of everything we did was recording all those transactions. The next is reporting those transactions. Subtle difference between record and report. Okay, so let's do that. Let's right away go generate all of those different ledgers and journals, or I can just simply look at one at a time. I can just look at my compliance, which pretty much has it all. So here are all the ledgers, the journals, and the fee book including that we spoke about, very important. And we're not going to focus on anything else, the reconciliation, etc. I want to focus specifically with regards to the disbursements. So let's go ahead and do the ledgers, the trust ledger. Typically, every legal professional would have to do it on at a minimum of a monthly basis. You can do it over a weekly basis if you like. At a minimum, you'd have to do it on a monthly basis. So it's traditionally on a time period. But for the purposes of today's demo, because we had this one particular example in mind, let me consider our Benjamin Franklin. So it's easier for you to understand how those ledgers have played out. Okay, so here's your trust ledger for Benjamin Franklin. Obviously, this captures everything that's happened in and out of trust. Okay, an important document to keep in mind. It highlights the client, the matter, and the particulars that we looked at, the components of the ledger that we looked at included the date when that transaction happened, the particulars as that document sounded, the invoice or disbursement if there were, and receipt, which is the money that you received, and a running balance. So this was exactly the bookkeeping guideline document for managing ledgers. So as and when it happened, so if you can recollect, we received a $565 retainer through this check, and that was the balance in trust then. And the first thing that happened was you paid right out of trust. You did a disbursement using a check for your court fee of $65, and your trust dropped to $500. And then you had your invoice, and that invoice consisted of disbursements and a legal fee. So you had your disbursement, which was a court appearance, outsourced consultancy expense of $73.45. You had another expense software costs. Maybe that was the software cost and that was the outsource work. Okay. So after the invoice was paid off, you actually had refunded the $2.80, now making this running balance 0. Okay? Pretty straightforward. 565 and 565 out. Now let's look at the general, because that tells you a slightly different story. So here are the 2 ledgers that we just generated. First one was for trust, and the second one that I'm generating for Benjamin Franklin is the general. And what this tells me is including HST, right? So the last time it was, this report really didn't care about HST, that didn't have a HST component to it, whereas the payment has, if there's HST involved, captures that as well. Sorry about that. That looks way better. So again, the particulars, the date, which includes the client name and the file name, which are 2 important pieces of information, right? And the invoice number. So you can easily track it. It has the amount, but it's split it based on the actual fees and the tax. So for the legal fee of $120, you had the $1,560 of tax, and for the individual disbursements, right from faxes, 100 faxes, travel mileage, software costs, court appearance outsourcing, and that was then moved, right, in these 4 different ways. And as it was moved, you had a decreasing running balance. And the reason why you have 49720 is because there's 280, and then there's another 65 that was taken right out of trust. Okay, so it's 565 in total, but the 6780, the 65 of trust was taken right out of trust. There's a 280 that was refunded. And before, with another 2 more minutes, let me just jump right into my journal. And I'm going to just do a general receipt. Let me do a general disbursement. We've seen it all. We've seen the other 2. And let me do it for this month. When I do it for a time period, I want to show it to you as a difference. When you do it for a time period, you're doing it for all your clients because you're reporting really on all of the clients, exactly as to how the Law Society requires it to be. So if you were to come down further, I guess we didn't have quite a bit of a okay, so let's look at, so you had the application fee, the court appearance, paralegal fees, all that's coming out, software costs for Divorcemate, right? So all that's captured within your General Disbursement Journal. Trust receipt. Let me continue to just generate those documents. General receipt. So this is your trust receipt. You received that $565 as a check of $565. That's all there is. The date, who was it received from, so source of funds, what was the matter, file number, what was the purpose, what was the amount, what's the method. Very important, as I mentioned, in the journal, it's also about the method, how that was received. And here's the general version of it, right? The general receipt journal. You received that as these 3 different formats for including the legal fees of $120 and those 4 disbursements, adding up to the 49720. Okay. Last but not the least, the fee book. We spoke about that, so let's just do a quick fee book before I run out of time on this particular webinar. In the meantime, I would highly encourage you to start asking your questions so that our team can start answering those. So basically, I hope I answered one question about the discount. So let's say you raise the invoice. You can always go back, add that discount, and raise it as an invoice in your next bill, so it reflects on your second cycle as a discount to that invoice. And there it is. So that's your fee book by client, by description. And the reason for the fee book, as we said, is because the disbursements are a critical component, or can be a critical component of your invoices. And so if you look at our last example of Benjamin Franklin, you've got the paralegal travel mileage, software costs, the faxes, and the court appearance with the amount and the taxes. Okay? So with that, I would try and wrap up today's webinar, and I would love to open up the floor for any questions that you may have. This webinar is going to be recorded and available to you over the weekend, so hopefully you will receive an email on Monday. We sincerely appreciate if you can send us an email with your attendance as well as your feedback. So how do I get to the fee book in uLaw is the question. There's a few ways. You can hit the accounts, document generation, and you have fee book right here. Or at any time if you're in doubt, hit document generation and hit compliance. This has all of the Law Society's compliance documents listed down. If a trip to a court can be at our expense if the client does not show up, again, that's really not a accounting question. It's more of a retainer letter question. So, the fact that the guy doesn't show up, if you've written your retainer letter or your engagement letter well, to say that you have to be charged for your time, regardless of whether he shows up or not, then most definitely yes. I would say that you would have to charge him, provided that he knows that he will be charged for it to begin with. Because it was knowing that if he didn't show up, then that was his discretion to make, right? So I would certainly say, where do we sign up for the CPD? As I mentioned earlier in my presentation, please do log into your Law Society portal and search for Disbursements Demystified, and you would be able to, or just type that in as part of your CPD hours, and you would be approved of your 1 hour of CPD. Okay. So if there aren't any more questions, again, I'd like to thank you once again for being part of this webinar, and we look forward to seeing you at our next CPD session at the end of October, but we have some very interesting webinar series starting in October as well, and we'll look forward to seeing you there. Thank you very much.